In 2023, I had to fire a trading strategy that I absolutely loved. It was winning 60% of the time, and it made me feel like a genius. But when I ran the casino manager's veto, I realized my favorite trading strategy was actually a parasite eating my account alive. In this video, I'm going to arm you with that exact audit. It is the only way to know for a fact if you are building a trading business or if you are just working for free. We are going to dismantle the win rate illusion. I'm going to give you the 1.4 survival number that proves if your strategy is dead or alive. And finally, I'll walk you through the Sunday firing squad, a 3-step checklist to audit your trading in under 5 minutes. If you feel like you are winning often, but your account is not growing, you are trapped in the win rate illusion. You might have a strategy that feels like your star employee. It works hard, it shows up, and it brings in wins. But that same employee is actually stealing from the register when you are not looking. This happened to me in 2023 with a Palladium short selling trading system. I loved this setup. On the chart, it looked perfect. I was hitting a 60% win rate. Emotionally, I felt like a market wizard. But when I looked at the cold, hard data, I saw something ugly. Palladium had a massive spread, about $12 wide. While I was winning 6 out of 10 trades, those wins were small. But when I lost, that massive spread combined with a sharp drop meant one loss wiped out 2 or 3 wins instantly. And I wasn't alone. A major FXCM study analyzing over 43 million trades found that on the euro dollar, clients were right 61% of the time. They were winning, but the majority still lost money. Think of it like a diet cheat day. You eat clean for 6 days a week, chicken, vegetables, hitting the gym, and you feel successful. But Sunday comes and you binge eat 10,000 calories of pizza. When you step on the scale on Monday morning, you haven't lost a pound. You've gained weight. That was my Palladium trading strategy. The high win rate was the clean eating. It made me feel successful. But the math showed I was binging my profits away on the spread. You know that voice that says,
I won 7 out of 10 trades this week. I am crushing it. Who cares if the balance is down a little bit?
But the pro trader flips that script. I don't care about the 7 wins. I care that 3 losses wiped them all out. This strategy is fired. This is why win rate is a liar. Most traders are obsessed with it because it soothes the ego. But a high win rate with a negative mathematical edge is not trading. It is a slow, comfortable way to go broke. And I realized I had to stop acting like a trader who wanted to be right and start acting like a casino manager who wanted to be solvent. So on 1st January 2024, I deleted that system. Not because it never won, but because it proved it was a zombie strategy. Because there's a specific number that separates a professional strategy from a zombie trading strategy. A zombie strategy looks alive. It takes trades, it books wins, but it's actually dead on the inside. It's just churning your money until you quit. And most traders are running zombies because they ignore the cost of friction. A lot of people think that if they make 1.01 for every dollar that they lose, they are profitable. That is dead wrong. In the real world, trading has a friction tax, spreads, commissions, and most importantly, human error. Let's do the math properly. Say your strategy makes $1.1 for every one that it loses. That looks profitable on paper. But subtract 5 cents for the spread, subtract 2 cents for the overnight fee. Now you have a 3-cent margin. Then you make one mistake. You enter late or exit early, costing you 5 cents. Suddenly, that profitable strategy is losing 2 cents on every dollar. I call this the break-even bandage. You feel like you are floating, but you are actually sinking because your trading edge is too thin to cover the cost of doing business. The trap starts when you think,
my stats show I make $1.1 for every dollar lost. I'm profitable. I just need to trade bigger size.
But the pro trader says that 10-cent margin is razor thin. One bad fill and I'm losing money. This is too risky to trade. So what is the magic number? Through years of backtesting, I found the hard line in the sand. Your strategy must have a profit factor of at least 1.4. This means for every dollar you lose, the strategy must bring in $1.4. But why 1.4? That extra $0.4 is your armor. It covers the fees, the bad feels, and the inevitable stupid mistakes that we all make. If your gross profit divided by your gross loss is 1.2 or 1.3, you don't have a trading business. You have a hobby that is barely breaking even. You need to either upgrade that strategy or fire it. But do you know the specific blind spot that is draining it right now? Before we get to the sample size secret, I built the Why Am I Still Losing Money diagnostic quiz. And in just 3 minutes, it identifies your personal profit anchor, the single biggest flaw in your execution, so that you can stop guessing and start optimizing. Click the link below to get your diagnosis. Now, let's look at why losing is actually the secret to winning. What if I told you that you could be wrong 60% of the time, literally failing more than you succeed, and be wildly profitable in trading? This is the secret the professional trader understands perfectly. Take Peter Brandt, a legendary market wizard. He openly states that his win rate is often around 40%. If you told a beginner they would lose 60% of the trades, they would quit. They think the trading system is broken. And this leads us to the coin flip era. We try a new strategy for 5 trades, we lose 3, we get discouraged and quit. It doesn't work. But would you judge if a coin is fair after just 3 flips? Of course not. It's random. When you judge a trading strategy on a small sample size, you are not analyzing data. You are reacting to luck. You are letting bad luck trick you into throwing away a profitable trading system just because it had a bad week. And it usually sounds like this.
Ah man, I tried that strategy for 2 weeks. Lost money 3 times in a row. It's trash. Next strategy.
But the disciplined trader's mind says, I'm only on trade number 4 of 30. This data is meaningless. I'll keep executing until the sample is done. To think like a professional trader, you have to stop caring about the outcome of the next trade and start caring about the outcome of the next block of trades. This is the 30 trade mandate. You are forbidden from judging a strategy's profit factor until you have executed 30 valid trades. But why 30? Because 30 is the statistical threshold where luck fades away and the true math begins to show. The real secret is that a 1.4 profit factor often looks messy in the short term. You might lose 4 trades in a row, but if your winners are twice the size of your losers, that 30 trade block will be green. You don't need to be right often. You just need to be patient. Okay, so we know the win rate is a trap. 1.4 is the goal and 30 trades is the test. But how do you actually do this? I'm going to give you a simple Sunday routine that takes less than 5 minutes. You don't need complex software to audit your trading business. This is how you take control. But I warn you, the hardest part is not the math, it's the emotion. It's sitting down on a Sunday, realizing a trading strategy that you spent months learning is trash. Your brain will try to bargain.
Oh, but that one loss was just bad luck. Maybe next week.
You have to ignore that voice. Be the ruthless casino manager. If the slot machine is not making money for the house, you unplug it. You don't hope it gets better. You remove it to protect your business. Because the trap starts when you think,
I know the numbers look bad, but I feel this strategy is just about to turn around.
But the pro flips that script. The profit factor is 1.2. My feelings don't matter. The math says veto. It's gone. Here's the exact checklist that I use during my monthly and annual reviews. I call it the Sunday firing squad. Step 1. Gather. Export your last 30 plus trades into a spreadsheet or just write them on a notepad. It doesn't matter. Step 2. Calculate. Add up all the dollars won the gross profit and divide it by all the dollars lost, the gross loss. For example, if you won $1,400 total and lost $1,000, $1,400 divided by $1,000 equals 1.4. Step 3, the veto. Look at the actual result. Is it greater than or equal 1.4? Yes, keep trading it. You have a trading business. No, immediate pause. You are forbidden from trading this system live until you tweak the rules to get that number up. Otherwise, fight and find a setup that actually pays you to work. So now that you have the casino manager's veto to fire those dangerous high win rate strategies, you need to replace them with a system that actually hits that 1.4 number. But the secret to hitting that number is not winning more often. It's actually knowing how to lose the majority of your trades correctly. So check out this video where I break down the exact 40% profitability formula that I use to stay solvent and to grow my account, even when I am wrong 6 times out of 10. See you in that video.